We have a very full morning this morning, but I wanted to start off with this little video of what's called the Q robot. And here we see him taking voice commands and then doing what he's told to do by just using voice. Then we have this additional video down here showing him shooting an arrow and nailing it. He's way better at shooting that arrow than I am, but this apparently is a very hard task for a robot, according to the article. And then we have finally the robot being sent to the refrigerator. This has been a famous part of the discussion of robots since the very beginning is, will I be able to send the robot so that he can get me the right beer? Well, there you go. This is the beginning of this morning's show, and we've got so much more for you coming up, so stick around. It's going to be chock full this morning. The Q robot is coming to us courtesy of CTGN. I'm assuming that this is a Chinese magazine or newspaper of some kind online. Last month, several Q family humanoid robot prototypes developed by the Institute of Automation, Chinese Academy of Sciences, CASIA, made a public debut in Beijing. We have trained the robot with large language models for 2 to 3 months. 2 to 3 months, says Chen Meng, a senior engineer at CASIA. Through visual recognition, it can automatically apply logical reasoning to precisely identify which vegetable it needed to pick. Also, the visual recognition feeds back to the robot's movement, making it the right vegetable, making it pick up the right vegetable from what we randomly placed on the table. In my personal opinion, products that combine humanoid robots with LLMs will have many demonstrative applications in various fields, including home services, entertainment, scientific research, and manufacturing within 1 to 2 years, said Lu Hao, an associate research fellow from the same place. In the next 3 to 5 years, they may truly become part of everyday life. The research team developed a sophisticated big factory to design and assemble the humanoid robots. The factory is to use AI technologies to help us design a robot we need. So the factory, again, this is a theme now you're beginning to hear, which Elon started talking about, at least 10 years ago, where the factory is, of course, AI driven as well. With AI technologies, the factory can automatically complete the robot's hardware design and software algorithm selection based on the requirements set by the researchers and adjust the parameters according to for the optimal design. The whole process for the initial prototype design can be completed in under a minute, significantly shortening the current research and development period. China has witnessed a notable trend of developing more intelligent humanoid robots for use in industrial manufacturing, medical treatment, and the service sector. However, 3 requirements must be met before they can be widely used, namely high performance, low cost, and mass production. The reason I'm reading this article in detail is because you can see so many themes here. Number 1, China. Where's the United States? Yes, we have many, many companies in the United States that are very clearly driving forward on their robotic development, including, of course, Tesla. But where's the United States? Where's the leadership in the United States? China, the leadership gets it. The leadership is behind it. Not so much I'm seeing anybody here in the U.S. in the political leadership. To make high performance and low cost products, Kyo, I'm sure that's not pronounced right, said that they have set up a research team dedicated to making components and parts. We've been exploring how to replace some foreign components with our own domestically produced ones in order to further reduce costs. However, the most critical issues in the robot's capacity to work consistently, can we integrate software and hardware solutions to make the entire system high-performing, low-cost, and highly stable? If we can, then we can move forward with practical application. So it also claims to significantly improve the technological innovation capability of humanoid robots, establish a safe and reliable industrial supply chain, and build an internationally competitive industrial ecology by 2027. Then you have this from Teslarati. Tesla is seeking a service technical writer to create, what's he going to create? User guides for its humanoid robot Optimus. When in the course of producing a new product, do you get a technical writer to create a user guide? Do you get them to create the user guide a year before you're planning to put it out to use? No, 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 no. Not in my experience. The company seems to be making significant progress on the Tesla bot and has opened a few jobs to prove it. Tesla recently posted a job vacancy for a technical writer. It states this: we are looking for a skilled service technical writer with a passion for robotics and a strong background in technical communication to join our team. The service technical writer will be responsible for creating comprehensive and user-friendly documentation for our robotic systems, plural, including service manuals, troubleshooting guides, maintenance procedures, and training materials. The ideal candidate will have excellent writing skills, technical proficiency, and the ability to translate complex technical information into clear and concise documentation. Tesla's technical writer for Optimus will work with all the teams actively developing the humanoid robot, including the engineering and product management teams. The technical writer will also work with customer support and service teams. With who? Well, with customer support and service teams that are already must be in place. You can't hire the technical writer to work with customer support and service teams if those teams don't already exist. The technical writer position hints that Tesla bot is closer to launch than ever before. Last week, Tesla posted a new job opening teasing field tests for Optimus at the company's various gigafactories. I reported on that. According to the job description, it didn't say at the Teslas, it did not say at companies' various gigafactories. It said there would be travel involved and they would be in multiple places. I think there's a chance that it will be third parties as well. According to the job description for technical program manager, Tesla's looking for someone prepared to drive the deployment of robots for trial applications. This then from Clean Technica. Autocar is one of the most respected news organizations in the automotive space. In a report published on March 15th, it said the Tesla Model 2, the Gen 3 car, the long-awaited, less expensive car from Tesla, will enter production next year. Well, we believe that. The report suggests that the Tesla factory in Germany will be the first to produce the Model 2. Since small, inexpensive cars are quite popular on the continent, but anathema to Americans. That's not true. Building the cars in Grunheide would save a lot of money in shipping costs from Austin, Fremont, or Shanghai. Being developed under the codename Project Redwood, that's interesting. The secret of the new model has a crucial role to play in help. Why is Redwood interesting? Come on now, you put it in the comments below. I want to see if you know. In helping Tesla defend its hard-won position among the world's leading electric car manufacturers, having been knocked off the top spot by BYD. That's not, anyway. The company has notified its suppliers. Wait a minute. Here's the way that Brian White always figures it out, right? Clean Technica reported that the company had notified its suppliers it wants to start production of a new mass-market electric vehicle codenamed Redwood in mid-2025. That information came from 4 people familiar with the matter who spoke with Reuters. 2 of these sources described the new model as compact crossover. Tesla sent requests for quotes or invitations for bids to suppliers for the Redwood product last year and forecast weekly production volumes of 10,000 vehicles in Berlin. 3 sources told Reuters production would begin in June of 2025. What we missed at the time that Autocare picked up on was a prediction by the company that 700 million Model 2 cars will be sold over the model's lifetime. 700 million cars. That's an extraordinary number considering that the Toyota Corolla has sold a paltry 50 million copies over the last 58 years. Crucial to the Tesla's viability in this context is a radical new production process the firm says could save as much as 50%. The unbox process essentially revolves around reducing the amount of work done at each stage. We know all that, according to Autocar. It is also widely believed that some or all of the chassis components for the Model 2 will be high-pressure castings, a process that not only lowers production costs, but also saves space at the factory. For example, the seats will be mounted directly. We know all this. I'm going to just pass over this. No powertrain details have been revealed, but it's likely to follow other Tesla models and offer single motor, dual motor. I don't know if that's true. I think we're going to be talking about a comparatively low-powered vehicle with okay range, 250 miles, so that they can use like a 40, this is going to be a very inexpensive battery in order to make the car inexpensive. And then they're going to make jillions of those. And if you want more power, you'll buy a Model 3. Musk has not been firm on the launch time for the new car, but optimistically be building the first car late next year. He did not say that. Tesla is said to be in conversations with parts suppliers for the new car and has acknowledged that its volume growth is expected to be slow this year as our team works on the launch of the next-gen car. But Autocar has a very cogent reason why the Model 2 is understood to be Tesla's primary engineering focus. Commercially, it is just much too important and urgent, much more urgent than the Roadster or Cybertruck. Interesting article, lots of data that we didn't know. I'm sure you didn't know. Nobody's been talking about this. I haven't even seen it on X this morning. So you might be hearing it here first, or kind of first, of course, this was a Teslarati, I think, article. Anyway, this is Randy Kirk. If this information is useful, if you enjoy getting it here, if you like the way I read, whatever, hit the like button, hit subscribe, hit notify. Of course, Brian White and I will entertain one another. Whether we entertain you or not, that's a whole other question, but we enjoy entertaining one another. Larry Goldberg will come later this afternoon, and Larry and I, of course, will be talking about all things that were good news. And by the way, I just, I checked it just before we came on the air. Tesla is up $2.38 right now, and the market is down, and who knows why, but okay. Please, Patreon. We need some more. We had a nice run there. Several people joined Patreon. I need more. We need lots of people to join Patreon, help to support the channel. Sawyer Merritt says this morning, breaking, Tesla has rejoined Facebook and is officially doing paid advertisement on the platform for the first time ever. Tesla originally removed its Facebook page 6 years ago. Facebook has over 3 billion monthly active users, or approximately 37% of the global population. This from Brad Ferguson. By the way, that's huge. Tesla apparently has decided that it can use narrow broadcasting, narrow focusing social media for their approach to bringing the information to the public. I'm all for this. This is fine. I'm all good. I still think they should do some of the bigger number stuff too, but I'm glad to see this. Brad Ferguson says, miles driven on Tesla FSD will skyrocket as a result of the dramatic improvements from the V12's software. Most had given up on version 11 and were not driving many miles on it. Now 12.3 is such a delight, people use it on a daily basis, and that will increase lots and lots of miles, and that'll be a good thing. And I definitely can tell you from my own experience that this is true. More downgrades and lower estimates today. This is from Barron's. While we remain constructive on the broader EV landscape with a long-term trend to electrification, near-term EV demand and tightened liquidity are creating challenges in 2025, wrote Rakesh in a note Sunday. Adding high inventory levels are pressuring wholesale volumes from automakers. Demand is decelerating faster than expected. Tesla stock was down 1.1 in pre-market trading, but now it's up over 1% in actual market trading. NIO stock was also off. Rivian shares fell. I have not checked to see whether NIO and Rivian also are now back up. For Tesla stock, it's the fourth downgrade from a major broker so far this year. Earlier in March, Wells Fargo cut its rating to sell from hold. And you'll see more this week, probably downgrades and rating changes this week, and maybe also after the report next Tuesday when we get the real numbers. Lower ratings and estimates have weighed on investor sentiment. Coming into Monday trading, Tesla stock had fallen 31% for the year. Estimates for Tesla's 2024 deliveries are now down to about 2 million units. Coming into the year, Wall Street was closer to 2.1. Tesla delivered about 1.8 in 2023, as you know. I'm still thinking they're going to do more than 2.1, but that's just Randy's optimism. I think they will, they should, and there's no reason why they can't make it up. The average analyst for Tesla stock is now about $203 a share. At the start of the year, it was closer to $240. 33% of analysts covering Tesla now have the shares rated a buy, and that is the lowest buy rating ratio since March of 2021, according to FactSet. When do you buy stocks? When is the right time to buy? That is not investment advice. But then there was this from Hey It's Yashu on X, of course. After waiting for an entry point, a once Tesla bear fund manager now flips bullish after researching robotics. He invested last week. Sentiment is looking good based on his formula of AI plus autonomous plus robots equals Tesla. He calls it RAAS. I guess that means robots as a service. U.S. consumers turned out to be made of sterner stuff. I didn't write down who this is from. I want to say Barron's, but I can't be sure because I didn't somehow got, anyway. U.S. consumers turned out to be made of sterner stuff than experts had predicted, much to the delight of economists, politicians, and Wall Street. But Brian Movnahan is warning that the Fed not to push the public too far. Thus far, well-reported, resilient consumers have managed to keep up their spending despite a combination of inflation and higher base rates, mitigating the much-anticipated slowdown of the economy. Yes, what we've heard all last year is the consumer is what's holding the whole market up. That would certainly be true, although I'm going to show you something in a minute that shows there's a little bit of business buying that might be helping now too. But their cash can only go so far, warns Bank of America CEO Movnahan, who has alerted Fed Chairman Jerome Powell not to overshoot on his policies to wrangle inflation back down to 2%. Speaking to Bloomberg, Movnahan, a favorite of Berkshire Hathaway CEO Warren Buffett, repeated points he has made previously that the public has been remarkably resilient. If we were sitting here last year, our team was predicting a recession somewhere early this year. Then they took that off the table as we move through the year, and now they're predicting 2% plus growth for this quarter. So this is the Bank of America team. Now, I reported last year, and I've been trying to find new reports of what that same team is saying this year, that the consumer would run out of money in the third quarter of this year. But he's saying the bank had already been predicting a recession in the first quarter, but now has flipped and is looking at 2% growth. The second largest banking institution in the U.S. behind IP Morgan Chase. It isn't alone in positively reassessing its forecast. Just this week, investment advisor Vanguard, with $8 trillion in assets, updated its house forecast to strip a recession out of its baseline view. The note from Joe Davis, Vanguard's chief global economist, added has raised its growth forecast in the U.S. from 0.5 to 2%, lowered its forecast for the year-end unemployment from 4.8 down to 4.0. But like fellow banking titan Jamie Dimon, Moynihan isn't overly bullish on the good news. You've gone from negative to slightly positive, he continued, but that is returning to the mean. It is not outsized growth. It is actually slowing down. Meanwhile, the consumer is very resilient, and that's providing an anchor to windward. And that is providing an anchor to windward that the Fed has latitude and a lot of places don't have. However, the Fed can afford to be restrictive. Moynihan wanted the Powell and his peers would have to be mindful of the change. At some point, the consumer will slow down, and they have slowed down their spending. Last year, it has been 10% growth, in the fall 5%, and now it's 3% to 4%. Outside of Bank of America, data trend can also be seen. The Bureau of Economic Analysts found that in January 24, the uptick in consumer spending or personal consumption expenditures was, that's the PCE, was just 0.2 compared to the month prior. Looking on a year-to-year basis, the downward trend is all the more obvious. In January, 2023 PCE was up 7.9 compared to what was a year ago, falling to 5.3 by June of that year. Come January, spending growth was down to 4.5. I know this is long. I know there's a lot here, but it's such a huge day for amazing news. A lot of it good, but I got to tell you, remember when everybody is saying no recession, that is the time to be a little nervous. Business Insider says there's a case for a productivity boom. So, of course, I'm bringing you this article because it confirms my thinking, but I'm going to tell you productivity is key. Last year, those supply chain snarls and other COVID-era knots have been disentangled. Plenty of firms expect the economy to go into recession, and so they curtailed their investments in new equipment and big capital projects. Okay, this is exactly what I was saying last year. Last year, I was saying that Everybody said there was going to be a recession. I don't care whether there's small companies, medium-sized companies, or big companies. They all looked at this news and they're like, okay, what do we need to do to make sure that we're ready for a recession? Because it was predicted and predicted and predicted. And so as a result, they cut back on their capital equipment. They were also spending lots of extra money on employees because there was such a shortage. They needed to have those employees. So they couldn't also at the same time be spending money on capital equipment. Conditions so far in 2024 are much improved. Recession risks have receded. Corporate confidence has recovered. There are signs that this is in turn inspiring companies to invest more in productivity-enhancing capital projects. It might also have to do with the fact that there's such amazing capital-enhancing products productivity-enhancing products available. Anyway, the S&P Global U.S. Manufacturing Purchasing Managers Index points to strengthening durable goods orders. The new order component, which measures how much new product managers expect to be ordering in the months ahead, has climbed to 53.5, the highest reading since May of 2022. Globally, conditions appear to be perking up as well. The U.S. is importing more capital goods. January's trade data indicates imports of real capital goods rose by 3.8% month over month. That is not annual. That is 3.8 month over month. Over the past 6 months, they've increased by 9.6 at the annual rate. Ultimately, imported capital goods will be used for domestic production. Stocks are up. A rising stock price means stronger balance sheets and more collateral against which to borrow. So during a boom, there's a positive feedback loop. Rising stock prices and easier lending standards accelerate the impact on investment. Capital spending also benefits from remember now, 5% interest rates are not high. So buying capital equipment at 5% is not crazy. That is an easy decision. Capital spending also benefits from an accelerator effect. If companies perceive the economy as getting better, they're more likely to spend more on capital goods to meet the expected increase in demand. So when GDP growth accelerates, investment tends to rise even faster, which should push up productivity down the line. A steadying of the labor market. Here we go. If you listen to this channel, you're gonna feel like this is just something that you've heard somebody say. A steadying of the labor market is also a strong sign of a coming productivity boom. In the early days of the pandemic, labor markets were red hot, not only in the early stages, all the way until about a month ago, driving up the rate of quitting and hiring. Employers were running around with fish nets trying to find people, and workers used their leverage to raise their prices, raise what they want to charge for their labor. A little heat in the job market is good, but you can have too much of a good thing. It's hard to establish productivity if folks aren't actually staying in their positions for that long. Today, labor market conditions have settled. Job openings have declined, unemployment has increased somewhat, and workers are less willing to quit their jobs. This means people are staying in their jobs longer. As workers gain experience in their roles, productivity should follow. Total factor productivity has been particularly weak since the start of the pandemic. Perhaps innovation has slowed down, or employees are still getting used to new in-person or hybrid work arrangements in the remote work area. But those hurdles should fall into the rearview mirror as the economy settles. At the same time, there has recently been a burst of new business formation. This is important since the slowing pace of business dynamism and a lack of new business formation in the 2000s was said to be the primary reason behind sluggish growth and productivity. We had slow productivity all the way to 2020 into the 2020s. But the rise in business formation suggests people are willing to take on additional risk. One analyst at CNBC said it really well this morning. This is Randy now. There are cross currents that are making it hard to see the direction of the economy and markets. But I believe, personally, Randy believes, productivity part is going to be huge, and so few pay any attention to it. Where are the markets now? Is Tesla still up? Yes, but only 87 cents. So before the market opened, it was down about 1.5. After the market opened, it was up as much as 3. Now it's down to up 87 cents in a down market, but obviously the trend is down as of this exact moment. The Dow Jones is down 97. The NASDAQ down 57. The S&P down 12. We have got the Magnificent Seven mixed. but mostly, well, 4 down and 3 up. So that's about as mixed as you can get. NVIDIA up 1164. Some reporting on NVIDIA today, a headline. I thought I had so much, I just couldn't go into it, but some reporting on NVIDIA talking about the competitors and also the Magnificent Six and others wanting to make sure they have more than just NVIDIA as a resource. Something, again, we've been talking about on this channel. We have got the Cathie Woods all up this morning. That's interesting. Over the weekend, the bonds were pretty strong. The bonds were strong, meaning rates were down, but we'll see here in 2 seconds. We'll go and check where they are this morning. We have got the percentages are the Dow is down 0.25%, NASDAQ down 0.33%, S&P down 0.22%, and Tesla up 0.45%. Now let's go check those bonds. Just a second here. All right, here we go. And we've got the 10-year is up this morning, 0.21, still under 4.25, but not much, 4.239. You know that for me, 4.25 is that kind of that mark of, I was hoping we are just going to keep going down, but obviously so far that's not true. All of the longs are down about, up about the same amount, about that same 2.1 basis points. The 2-month is actually up, but only 0.6% of 1 basis point. Sometimes these numbers, you just can't say them all morning and get them all right. Okay, here we go. Oil prices are up $1 this morning, 81.65. That goes back to about the maximum that it's been recently. The Ukraine continues to strike Russian refineries, according to this headline. I have not read the detail on that at all to know any more than what the headline is saying. Natural gas down 1.69 this morning at $1.63. So that's starting to look like a collapse again in the natural gas prices. We have got the dollar dipping a little bit this morning. We have got gold firming at 2177, but that's still well below the 2.2, around 2220, I think was 20 around there last week. We've got copper up a little bit this morning, still over the $4 level, $4.01 basically. We have got Bitcoin up another 2015, but that's still only at 67.8 compared to where it was a couple of weeks ago in the 72, I think, range. Okay, let's go back, take one more gander at Tesla is still up 69 cents. Okay, remember, we've got Larry later tonight helping with Good News Monday. We'll hope that upward trend in Tesla continues. We've got Brian White coming in just a little while. I think we're going to take one of those round the world trips where we look at every factory and see what's going on in all the different factories. Usually Brian has good information on all of that. And then, of course, yesterday we had an outstanding morning show. You want to go take a look at that? I will put the card up right here. It received a huge number of people watching it, and I think you'll want to go back and check it out. Okay, yeah, Patreon, join Patreon, and then, yeah, you could buy some of those Cybertruck bottle openers if you want. Same price, $25. It's been great talking to you.